But what you can see here, okay, is 3 weeks that are forming inside of one another. Okay, so there's 100% overlap in almost 3.5 weeks of trade, given that pretty much we were inside there for the whole of last week. Call it almost a full month of trading in a contracting range. Okay, if I was to put this on a daily time frame, you can see that range contracting. Okay, so smaller and smaller range, a lot of dojis, a lot of tails on both sides. Okay, so that's our contractionary phase. Now, what we're looking for in this contractionary phase is either a break, initiative to the upside, or initiative to the downside. Okay. Now, what I'm going to show you is I just want to show you what the weekly profiles look like, and you can see this. Really for from the 13th of May already, we had a nice very tight value area on the week. The following week again, we had a $10 value area. The week after that, again, an unusually tight $6 value area, and the week after that, again another $6 value area. So very, very unusual contractionary phase, and again, leading up to that breakout last week, a good $10 value area, but very, very tight range, as we can see on the weekly profiles. Now, what is wonderful about this, these profiles, is they show us that really balanced market. Now, the key crux is when a market is very balanced, be cautious preempting a break. Okay, and that's the real key takeaway from today. You didn't need to preempt gold. Right, the gold gave you a very, very good clue starting on Thursday that opportunity was about to be in abundance. Now, let's get into it. Let's have a real look at what this looked like. I'm going to first bring it up on the 30-minute for you. I'm going to show you what it looked like. First and foremost on the Thursday, then obviously the collapse on Friday. Okay, so the first thing we're looking for in a contractionary phase is the break. Okay, so every single trader was looking for the breakout of this 1307.8. Why? Okay, it was the previous week's high. Right? We could see it was protecting the high made back on the 12th. Alright, so it was almost like a double top around that 1307 to 1307.8. So it was the break, or a lot of traders call it the inside week break. It was the break of the double inside week. So that was our real key pivot, 1307.8. Okay, and that's the key level we're going to pay attention to. But more importantly, what happened once we had that break. Okay, so now we're going to bring the footprint into it, because this is where the footprint is such a unique tool. All right, the footprint in essence tells us, precisely what is happening at each bid and offer, what interaction the buyers and sellers are doing with one another. Now, remember what I said to you. In a breakout, what we need to see is initiative being taken. Okay, so first things first, we've got the 1307.8. You can see it by the purple line. Pink line. Okay, now initiative on a footprint is simply just very, very high volume, and this is where the footprint is unique, is that it colors everything in terms of relative. Okay, so very dark color shows very high relative change in volume relative to the rest of the day. Okay, so we don't need to scroll back and go look what the volume was. We can simply look at the color coding. Right. Equally, we get that relative change in the delta, as well as obviously the cumulative delta throughout the day. Now, what you can see on the break, and this is where the footprint is head over heels better than any tool that out there, is ultimately once the break at 1307.8 comes, you can see exactly how the buyers and sellers were interacting. Okay, had I missed this move, had I come in and I wasn't here on Friday and I first traded on Monday, I could go back and look precisely how the buyers and sellers were interacting at that break point of 1307.8. Okay, this is the one real key benefit to the footprint, is that it does summarize that interaction on the break. Now, what you can see, and remember what I said to you, when a contractionary phase breaks, in other words, initiative comes into the market, all the big time frame players should be on the same side. In other words, we're breaking to the upside. Therefore, larger time frame participants should be long, short-term algorithms should be long, day traders should be long. Effectively, there should be a real net long position in the market. Why? Because you got people stopping out of shorts, you got longs entering longs, you got big time frame participants entering longs. So the net result is a very long position through the 1307.8. Now the first thing, and this is where it's crucial, the first thing we note on this break is look at the pickup in the volume. Okay, we've gone from averaging say 600-700 contracts every 5 minutes to suddenly doing 8,800 contracts. Okay, that's a more than 10-fold pickup in volume. Massive. All right, so there's that interaction. There's the break. We can see the break. It comes with a surge in volume and a surge in delta. In other words, the net interaction is that buyers are lifting offers more aggressively than sellers hitting bids. Okay, now what happens? The market shoots up, trades all the way up to call it 1309. So we do a dollar move through that key little level. Okay, and we can see a chunk of volume trading here, a real two-way trade going on. Now this is the first clue. This was the real first, almost like what the heck kind of moment. Is that, remember what I said to you, the definition of a break of a contractionary phase is that we should only see one time frame participants. Okay, we shouldn't see two-way trade. We shouldn't see large buyers and large sellers entering at the same prices. Okay, and this was the first key takeaway. This is that absorption that I was talking about when I showed you the footprint grid earlier. All right, what you're effectively seeing here is big time frame players are entering the market, but equally there's a seller sat there offering as many contracts as the market wants, and that's the real first clue. Why on earth is there such a big seller when everyone should be net long? That's the key takeaway. Okay, that was it right there. There was a massive seller absorbing all of the buying right at the break point. Okay, that should have been the first question mark. The market then consolidated. Okay, so we can see, for the next almost 2.5 hours, the market sat inside this range between 1307 and 1309. Now, that was the next big clue, because in a breakout of a contractionary phase that has been lasting for almost 4 weeks, the market should not hang around. Okay, initiative by the very definition, there shouldn't be much liquidity provided, and the market shouldn't hang around. In other words, it should keep trending up to the upside. Right? This market spent from 10:30 all the way up until almost 1 o'clock in the afternoon without breaking. I mean, it only went a little bit later, almost a good 3 hours before the market broke up again. That was the second fishy clue, that something is not right about this break. Okay, now note, the next break came a little bit later on. Again, note, the break comes, the volume surges, the delta picks up. Okay, let's see what happens again. Note again how at every single price, note the large absorption. Okay, so again, what's happened here is that the market's broken to the upside, large time frame participants have entered, the volume's up, the buyers are in, everyone's buying, but again, someone's absorbing. There's a seller sitting there absorbing the market. Okay, that was the real key two things that just stuck out in my mind on the footprint, and that's what I was leaning on in the tweet of, someone sat there absorbing all of the buying the whole day. Therefore, a big down move is imminent. Why? Because if everyone, if large time frame participants have gone long and the market's net long, but someone's actually taken the other side of the position, once that selling starts and prices start to move lower, there's a lot of trap positions and effectively a potential for a deep imminent drop. Okay, now that's the two key takeaways. Now what I am going to show you, sometimes it can be, make no mistake, you're not going to learn the footprint in one go, yeah guys, it doesn't work like that. All right, I will show you what the difference looks like in terms of a breakout, so you can see what what a real breakout should look like versus what you are seeing at the current present moment. Okay, so let's go now and have a look at one or two other key factors that determined ultimately the collapse. Okay, the first one, and a lot of you would have heard this term of a head fake. Okay, so what we can see, if we get it up, notice how Thursday, after breaking out to the upside, failed to close above those 3 swing highs. Okay, and that was the real key takeaway. The market effectively had a head fake. Okay, it closed back inside range, back inside value after failing to break out to the upside, which means that that low of that day becomes the most significant level. Why? Because anyone that's long now is going to start stopping out once we take out those 1301. So that's our next crucial little area, for the Friday session. So let's go now and have a look at that Friday session. Let's look at ultimately what it looked like. Again, this time I'm going to use a bit of a 5-minute chart so I can show you how it all played out. Okay, so what you can see is the 5-minute chart. I've highlighted, that 1302 effectively. I just want to make it a little bit darker for you. Okay, so we can see the market came in nice and early in the morning, and right on the 6:37 o'clock in the morning, and we can see straight away through that previous day's low, the market takes out the 1302s, trades down to 1300s. Okay, good 6,000 contracts, and that's important because that's telling us now a lot of those longs from yesterday suddenly stopped out very early in the morning. Okay, it's telling us that, in our analysis, we're actually right. There are a lot of longs trapped now, and the market is vulnerable to the downside. Okay, so what we can see for the rest of the day is the market begins this process of, again, almost contracting. Okay, so we could see a nice wide range, a smaller swing high, smaller swing low, a smaller swing high, and another smaller swing low. So a contractory phase just ahead of our low of the day at 1300s. And that was our key point in the market. That was our key pivot, that 1300 level. We've obviously been talking about that level a lot in the streams over the last couple of weeks, how important 1300 was. And note, once it went, that was the beginning of the great collapse from 1300s all the way down to 1278. Okay, so $22, 220 ticks in the space of 3 to 4 hours. Okay, so the key takeaway, right? It's wonderful going and saying, okay, well, you should have got on this, you should have sold short. But the key takeaway was actually not on the Friday. The key takeaway was on the Thursday. It was interpreting what had actually happened. Seeing all of that buying being absorbed. Make no mistake, you should have been long on Thursday. That was the day to be long. That was 100% the right trade. Were you not long, you were probably doing something a little bit counterintuitive. I never like the word wrong, but probably counterintuitive given the nature and the structure of the market going into Thursday. Looking at the facts, however, after Thursday presented us with this fantastic opportunity. Now, where I want to leave you, and the thought I want to leave you with, is I want to bring it back to the footprint again. And now I want to go and I want to show you what a good breakout looks like. Okay, so I've obviously shown you, the contractionary phase now. Now I want to show you what a good little breakout looks like. So, first things first, let's have a look at the stop run in the morning, and you can have a look at that. So the first thing was the 1302s. This time, note what happens when we get below the 1302s. Okay, the market merely just stops down and comes straight back bid. Okay, so very clearly not necessarily aggressive selling there, but just a stop run. Okay, we can see the fact that it came straight back in the very next rotation tells us it's just a bit of stops going off. Right? When we do have these stop levels, very, very important, and we deal with this quite extensively in the footprint course, we can see the little bit of exhaustion here. Okay, this is one of my favorite plays, actually. When you have, obviously, selling into the bid only versus no counter lifting of offers, that effectively shows us an exhaustion point in the market. Right? Equally, those exhaustion points tend to get taken out. Right? That's one of the key strategies dealt with in the footprint course. So had you known that, it kind of made you aware that 1300 at some point in the day is vulnerable. If you tied in, obviously, the previous day's analysis and all that selling, as well as, obviously, the head fake, those 1300s was a very, very, I don't like the word obvious, but it was a level that, definitely needed to be respected and watched for a continuation move. Now, let's have a look, okay? So we can see, obviously, first time market came down, bounced back off. Second time market came down, and again, a lot of reluctance from the sellers, no real interest. Volume did pick up. We can see that relative volume picking up. Again, no interest from the sellers. Okay. Third time around, again, sellers come in. Note the pickup in volume. Interested, and then not interested, and reversed again. Let's see what happened the fourth time. Okay. Fourth time market comes in, and this is one of this, we deal with this so exclusively in the footprint course as well. Before every breakout, okay, we call it the calm before the storm. Before every breakout, you are always going to see this calm before the storm, and that is the calm before the storm. Okay, it's effectively a chunk of absorption that takes place just ahead of the break. All right, what causes this simply is that obviously the sellers are now starting to pick up the pace of selling. You get that last little bit of buying. Once the buying order's done, you then get the continuation flow. Okay, and that's what you got here. Now I want to show you the difference here, because note, obviously, in those first two examples I showed you from Thursday, note how we had only $1 range to the upside with a lot of absorption. Okay, and a small price range. Note how this time the break goes from 1300 down to 97.5. So almost a good 35-40 price move. And notice how light these colors are. Okay, so in our previous two examples, we had lots of dark shades. That was all that absorption from the selling taking place as we broke to the upside. This time, there's no absorption from the buyers. Okay, we can see a little bit of absorption taking place here, but ultimately, once that buying stops, what does the market do? flushes again. Okay, and the market just keeps rotating and grinding and grinding and grinding and grinding and grinding. Again, another little flush lower, a wonderful little imbalance, another trade strategy dealt with in a footprint course. Okay, another imbalance shows us how strong these sellers are. Again, no dark shades, sellers complete control, no liquidity provided by buyers. Again, notice for the first time in this entire move, there the liquidity begins to be provided. There the liquidity begins to be provided. So the buyers stepped in, but only after $11 of sell-off. Okay. Notice again, once those buyers step in, so once the buyers provide liquidity, what does the market do? Consolidates. Okay. For the next 25-30 minutes, gold consolidates. Once those buyers get taken out, what do we get? Continuation to the downside. Okay, so that's it, guys. I don't want to talk too much more about this. The wonderful thing about the footprint is that it tells such a beautiful story. It's constantly updating. The story with a footprint, and that's why it is such a unique, fascinating tool. And why for anyone that is looking to really, take their career, further along and develop a very, very good edge course, I would definitely say the footprint course is a wonderful course to consider.